Hey everybody, welcome back to the Crypto Sherpa channel where I read you that crypto news. Now today's article is coming from CoinDesk, and Hong Kong's incoming spot Bitcoin ETF could be a big deal. Here's what analysts say about it. Now, the massive demand for a China-listed gold ETF sent its premium soaring to 30% earlier this week. Ooh, 30%. I'm sure a Bitcoin ETF would be a lot better. But Hong Kong regulators will likely approve spot Bitcoin ETFs as early as next week, Reuters reported on Wednesday, and the funds could offer an alternative to Chinese investors reluctant to invest in domestic real estate and stocks, one observer noted. Now, the market should not also expect flow anywhere near the size of the US spot ETF flows, said a K33 analysis. And of course, how can you match with BlackRock, who has 269,314 Bitcoin? I think that did surpass MicroStrategy. This was noted 23 hours ago, so not too long ago was that reported on. But no, MicroStrategy, I believe, holds 214,000. Yep, that's it. So yeah, so China ETF. So if you're wondering why we're having a dip right now, it's mostly because of this going on. What's the best way to acquire Bitcoin? You want the cheapest price. How do you do it? You sell a bunch of Bitcoin on exchanges to cause that price to go down. Once it's down, you rebuy back from over-the-counter exchanges, and that won't fluctuate the price. Messing with exchanges does. Over the counter, nope, just peer-to-peer on the blockchain. That's it. So that's what these guys are doing. So it wouldn't surprise me if they try to keep this price down, but again, they got to approve that ETF first to get the money to start inflowing. Otherwise, I bet BlackRock, Grayscale, even MicroStrategy, and some other companies out there are going to take advantage of it. But yeah, let's go over this article. So here we go. High anticipation for a spot-based Bitcoin ETF in the US and the eventual inflow supercharged Bitcoin's run up to new all-time highs. And now Hong Kong regulators reportedly are inching closer to approving similar funds, news that thus far has been mostly unnoticed in the crypto circles. Now, these vehicles, however, could open the floodgates for Chinese investors looking for a new haven next to gold and oversee real estate and stocks in which to store their wealth. So they want more options. So that's why we saw kind of a lot of other people inflow into it without just getting involved in the real thing. But I think China actually has laws, since it's a communist country, to not be able to trade or transact. But some people still hold it out there. But they will be a big deal, says Noel Atkinson, macro analysis and author of Crypto is Macro Now newsletter, said in an email interview with CoinDesk. It's not just for the access to hedge funds and family offices based in the region, it's also because of the access it gives to mainland investors. Now, Chinese investors are reluctant to invest in domestic real estate and stocks given the well-documented troubles of the country's house market, construction sector, and equities. That in turn has spurred interest in alternative assets like gold, Atkinson explained. Notably, trading with a gold-linked ETF in China was halted earlier this week after its price premium reached 30% as investors piled into the asset trading at record-high prices. Now, in a similar fashion, there could be a significant inflow of funds into a Bitcoin, Atkinson said, adding that the investment case for the largest cryptocurrency will become even more prevalent if concerns about further devaluation of the yuan ramp up. Now, Chinese authorities most likely realize that a significant portion of their citizens will be diversifying into hard assets, whether approved or not, and would probably prefer that they be in assets not related to the US economy, Atkinson noted. Now, Marcus Thielen, founder of Singapore-based analytics firm 10x Research, said that the ETF could raise the probability of a Chinese retail buying frenzy similar to the 2013 bull market, and Bitcoin's popularity exploded in the country that year, driving the price to over $1,000 from only $10 in January back then. Oh, man, 2013, to be in at that time. But the rally didn't end until China's government banned financial institutions from trading the asset in December. Now, 70% of Chinese-owned property, and as the market has recently repriced the lower together with the stock market, there are not many alternatives, Thielen said, but Bitcoin is one. Now, while the approval of ETFs could be further positive catalyst for Bitcoin, the market should not expect flows anywhere near the size seen by the US spot fund, said Vittel Lunde, senior analysis at K33 Research. Baxter. Now, the two futures-based Bitcoin ETFs listed in Hong Kong have have their assets seen solid growth this year, more than doubling their assets in Bitcoin terms, he noted. But their combined size is less than 2,000 Bitcoin, or just 2% of the US listed futures ETF. Now, the small size of the HK Futures ETF compared to the US is, in our opinion, a signal to the market that HK ETF should see less exuberant flows than those witnessed in the US, Lunde said. So, yeah, so there you go. So, yeah, China is going to begin ETF. Price is going to stay down. We have the halving coming up, so you can even chalk it up to that if you wanted to, because if you look at all the cycles, yeah, there's always the Bitcoin dip before the halving. People are not selling right now because we know how scarce it's actually going to be. So we're hearing the banks and these guys going to the actual miners saying, "Can we buy your Bitcoin?" And they're going, "No, no, no, no." It's like, this is the only amount we're selling just to pay for electricity, but we're stocking our bags. So yeah, they're doing everything they can to not buy from the exchanges, but looks like potentially these guys China did. So well, I hope you guys enjoyed this article read through, and if you did, smash that thumbs up, subscribe to the channel, and until next time, the Crypto Sherpa is out.